Say hello to our next guest, Vaibhav Sanghvi, co-CEO at Avendus Capital Alternate Strategies, is now joining us on the show. Vaibhav, good having you on. So first things first, it's been fairly choppy last couple of weeks for the market and mid-caps going through their correction. What's the sense you get on the street in terms of fresh money coming in some of your funds?
No, I think in our case, at least in terms of the funds, I think we've been receiving pretty steady inflow onto our relative return fund, which is currently open. The first one we've already paused for any further subscription. So from our end, the subscriptions have been pretty decent. In terms of the markets, while you are right that the mid caps have been pretty choppy in last 1.5 months, we are not seeing that on the benchmark indexes. I mean, in the sense that Nifty has been pretty buoyant. And clearly it looks like the pain trade is probably up while the broader market is pretty dampened.
Okay, Vaibhav, hi, good afternoon. But your thoughts on this mid-cap fall, is it just pure technical fall because of what's happened with the mutual fund schemes, a couple of stocks moving to ASM category and all the additional surveillance measures, or is there something more?
No, you're right. I think part of it is definitely, technical reasons. But what we also see is basically in the last quarter as well, is that we are witnessing some amount of margin pressure because of the increase in commodity costs. So while the mid-cap space overall is trading pretty rich, once you see some amount of margin pressures is where some people or investors get a little cautious about. So I think it's a combination of both. But going forward, I think it will be very selective in terms of one needs to be very selective in terms of getting in terms of the mid-cap opportunities.
Okay, so the other complaint that we hear from time to time from different brokerages, at least a big foreign brokerage put that out today, is that earnings aren't quite living up to the expectation. And once again, Q4 was just shy of really delivering something breathtaking. And in that context, maybe this market is expensive. Would you agree with that argument?
Yeah, I mean, we have seen enough of that, in last, many years. But the hope is currently, and looking at the commentary, from overall corporate world, we do hope that in FY19 there would be some good earnings increase. However, the street is at around about 20%. We would be close to about 15% in our expectations. So there might be some amount of disappointment as well. But having said that, 15% is still a very good and decent amount of earnings recovery. But as you mentioned, I think the proof of pudding is let's wait and see whether it gets delivered or not.
Okay, once again making a move towards the 10,850 mark. So just keep an eye on that, and the excuse me, the Bank Nifty also making a bit of a move. So from here on, Vaibhav, what's the portfolio stance? Because we started to see a bit of a broad-based market move after a long time. Perhaps a bit too early to say that, but over the last few days, we've seen across the board buying in pharma, IT, banks, NBFCs, all the consumer names have been doing well anyway. So from your point of view, what will be the top 2 or 3 sectoral sort of plays right now?
In terms of our sectoral picks where we are bullish is we continue to be bullish on consumers, both on discretionary and staples. 2, in terms of, we have been consistent believers of technology as a sector in terms of IT space, and we have been consistently bullish over a period of last year. At the same time, we are, still positive on private banks and getting some positivity on the NBFC space as well. Because in an environment where the interest rate starts moving up, you see that the pressure on the margin starts to get a little eased. So those are the broader spaces where we would be positive on at this point in time.
What about pharma, Vaibhav? Suddenly there's fire in that side of the market. I mean, people really seem to be rushing in to capture value perhaps. But does this look like the real deal? Is this really a bottom in the making?
We have always believed that pharma is pretty much a bottom-up sector, right? And I would not want to paint the whole sector with one brush, saying that everything is, bottomed out. We are still seeing some amount of pricing pressure in US. Having said that, we are concentrated on those companies which have some sizable domestic presence as well. So there are some opportunities in the pharma, but I would not want to come out and stick out my neck saying that the whole sector has bottomed out.
Okay, by the way, look at the stock that's now finally making a move. It's Ashok Leyland. Corrected quite a bit, of course, and yesterday also we spoke about it. Perhaps even in a strong market, that was a weak stock, but finally that stock making a bit of a move towards the high points. So moving up right now. Your thoughts on stories like Ashok Leyland? I know you won't be able to talk on individual stocks, Vaibhav, but the kind of these kind of names which sort of led the market rally but cooled off a bit over the last 2 or 3 months.
So if you see, whatever is happening on to the truck overloading, ban and subsequent leeway on that, as well as what you have seen in the quarterly numbers as well, is, some, again, coming back to that whole margin pressure issue, because of the rising commodity prices, is where the whole analyst community or the street is trying to realign the numbers. I think good amount of rally has already we have seen through. It's time to consolidate probably on this for further up move before it starts moving up again.
Okay, Vaibhav, just hang on a second. There is an update from Moody's that's come in on a couple of these banks. I'm just trying to see if there's any sort of immediate stock reaction coming in. Let's pull up the intradays. Not really. ICICI Bank is quite all right for the time being. We'll just get PNB and the others up for you as well. This is some kind of an update on. The
best classical indicator is when Moody's comes out and raises red flag. I mean, it's really the best classical indicator. It'll never go wrong. Moody's comes out and downgrades anything. The best time to go out and buy. So to be always worked in the market. Just
2008. You're going back to those.
No. It's always the it's always the best classical counter indicator. Whenever there is raise risk assessment or raise red flags or move negative.
Actually, all those stocks are actually spiking up. They are. Pull up for BOB and PNB as well. PNB is still flat, but ICICI Bank and Axis Bank are actually spiking higher when Moody's has actually increased the counterparty.
You never go wrong. When something like this happens.
Okay, in fact, on that note, Weber Banks, what are you doing? I know you like private sector names, but the hottest debate right now is whether you can make money if you invest in PSU banks right now. I'm not talking about a trade. Maybe 6 months, 1 year. Are you in that believers camp on PSU banks at all?
Sure. So anyway, I mean, on that note, I mean, I like your observation, Anuj, on this Moody's thing. But in any case, I think what we have seen in PSU bank, let's see, objectively, is larger part of the pain is recognized on their books. And there is a possibility of some amount of resolution coming in, in the next couple of months, because of which we can see some amount of momentum, lying in this PSU space. So we are not bearish on this whole space. This is a space where we would probably, trade in and trade out, rather than owning for a longer period of time.
Okay, just to explain that point, I mean no disrespect to anyone. The point here is that rating agencies ultimately will do the stuff dependent on data. The market will already move on. The market would have moved on, and the data would then be released later. And after that, you decide, and that is where obviously an investor or a trader who's a savvy investor, savvy trader will always make more money before the event, and then rather wait for the event to happen. But anyway, Vaibhav, so for this year on the index, what kind of expectation should investors have? Last year was a good one, and unfortunately, everyone benchmarks that as the barometer. So the kind of returns that you would expect this year.
Sure. So before I answer that question, let's understand what phase of the market we are in. And we are in a phase where interest rates are going up, whereas the earnings are also recovering. Typically, what happens in this phase is basically your markets would generally follow the earnings, but with higher volatility, because you will see some amount of macro numbers getting awry purely because of the higher interest rates, volatile currency, and global liquidity push out. So we should ideally follow the earnings, but not more than that, because we don't see any scope of re-rating higher from here on.
Okay. All right, Vaibhav. We'll leave it on that note for today. Thanks very much. Good talking to you.